Hi everyone, welcome back to another video by Mashvisor, the most trusted source of residential real estate data and analytics in the US market. Are you thinking of getting into real estate investing? Well then, you should avoid these 6 rookie mistakes at all costs. One of the most common mistakes which beginner real estate investors often make is to treat listings as their future home and not as their investment property. When you look for a profitable rental property, remember that this is meant to be an income property where your tenants are going to live and not your own home. So don't look for the neighborhood where you'd like to live in. Don't search for features and amenities that you'd like to have. Focus exclusively on the traits that make for a lucrative traditional or Airbnb rental property. Another rookie mistake for which many investors fall is to buy an expensive luxury real estate property hoping that it's going to bring them a higher monthly rental income. While it is true that bigger luxurious properties rent out for a higher price, they also cost more to purchase and to maintain. So at the end of the day, small cheap homes tend to be optimal rental property types, especially for beginners. Although the income is lower, the return on investment is usually higher because the cash investment and then of course the recurring expenses are also lower. A third mistake in real estate investing is to buy a property that you liked without conducting detailed rental property analysis. When you're buying an investment property, the data and the numbers should lead your decision. You should analyze the investment potential of both the real estate market and the property that you're considering buying. Using rental comps to evaluate exactly how much rental income you can expect, what your costs will be, and how much profit you're going to be able to make. Or, alternatively, use real estate investment analysis tools like Mashvisor to turn 3 months of research into 15 minutes. Another mistake which many different beginner investors commit is to not walk the property before buying. While your ultimate investment decision should be guided by your different investment property analysis, you can't buy a property without ever seeing it in person. Listing images and virtual tours can be misleading to say the least. You need to visit the property and you need to get a professional home inspection before investing in a rental property. In this way, you're going to be able to spot any potential risk factors both in the neighborhood in general and the property itself. A fifth real estate investing mistake is to buy a property without an agent. If this is the first time that you're dealing with a real estate transaction, you need an agent. Agents are able to get you the best price, to negotiate favorable terms, and to close quickly. Moreover, they can help you with various legal aspects related to buying a real estate property. Last but not least, once you've bought your investment property, you need to avoid the rookie mistake of setting the rental rate too high or too low. If you ask for a rent that's higher than the market average, it's going to take a lot of time to find tenants, and the prolonged vacancy is going to eat into your profit. Meanwhile, setting the rent too low deprives you of the extra cash flow that you could be getting otherwise. You need to make sure that you study the market and ask for a rental rate that's close to the average. So, these are the 6 real estate investing mistakes that beginners make most often. Even experienced investors are not protected from falling for them, so make sure to avoid these mistakes to make profitable real estate investment decisions. So, I hope you enjoyed our video and that you found it informative. If that's the case, don't forget to hit that like button and to also subscribe to our channel. I'm going to be back next week with more real estate investing videos.